Well, it had a big impact on the election. One of the things is, as you get older, you become more concerned about your health and your wealth. Mainly, you want to keep both of them as long as possible. So you're very into the status quo and rolling back, if you will, time in some way. But we have something like 12, 13% of the U.S. population is over 65. The over 65 crowd doesn't spend as much as when they were 45 and making more money. So it is a drag on the economy. It's one of the reasons why I think we're right. Basically, the U.S. for the next 10 years is about a 1.5% GDP economy. If you try to push a 1.5% economy and make it a 3% economy, you might get it for a year or two, particularly if you spend $1 trillion on infrastructure and actually spend it. That, by the way, I think you could pass the bill and then take years to spend it, so it might not happen too fast. But so you could push it a little bit, but I think the aging of the U.S. population, of the Chinese population, of the European population, of the Japanese population means that the mature industrial countries plus China are going to continue to be pretty slow growers for at least another 10 or so years. And then the population starts to shift again a little bit, and you could see a little bit of growth coming back. So, we're in a, so it's a pretty serious, and millennials aren't going to pick up the slack. Millennials are a generation that entered the workforce with more debt, student debt, than any previous generation. They typically don't buy quite as much of the normal goods. They don't drive as much. They live in cities. So if you're investing in real estate, you might want to focus on apartments as opposed to condos. Did you just buy a condo? Anyway, thought so. Anyway, so there's a lot of stuff going on in the demographics, but I think the aging part means that the U.S., Europe, and Japan and China continue pretty slow growers for about a decade before another pattern kicks in.